Did you start record? I'm not on. Okay, here. Okay, is audio working? We can hear. Do you just want to verify that they can hear me fine? Great. Thank you, Shelby. Just want to make sure because I didn't hear it in my ear like I normally hear it. Okay. So today we are welcome back from the feels like a long break. But today we're going to start with some general announcements. Some of it's repeat, some of it's just a heads up for what's coming. Exam 3 is Sunday through Tuesday. You have to finish by 6 p.m. on Tuesday, and you can start. I have 9 a.m. here, but we are opening the Proctor Lab at 8 a.m. on Sunday. So the Proctor Lab is open 8 a.m. Sunday to 6 p.m. If you submit your exam by 6 p.m. Eastern Time on Sunday, you will get a 10-point bonus. Now, the advantage of taking it on Sunday is twofold. First of all, you get the bonus, okay? Second of all, if you don't have to wait in line later. Sunday, we are there. Haley and I are proctoring along with a couple other proctors, so we will have both labs open starting at 8 a.m., and we have the exclusive use of it from 8 to 12. That doesn't mean you have to come from 8 to 12, but other classes can start coming at 12. But because Haley and I are coming, they've agreed to open early. So last 2 years, we've done this on the Sunday before finals week, and we've been pretty steady all day. Of course, there's no guarantees about future. I can't predict for sure, but it's been steady. At the most people waited on a Sunday in the past has been 10 minutes or so. Can't guarantee this, but it is a good day to come in and take the exam and get the 10 bonus points if that works with you. You can also get the 10 bonus points with ProctorU scheduling. You need to schedule with ProctorU if you've not done it and you go to sign up and there's not the time you want. Don't hesitate to pick up the phone and call them because they can do things on the phone that you can't do sometimes when you sign up. Okay, there is a question in Learning Catalytics. It will be open for a few minutes, but how do you earn the 10-point bonus on the final exam? Just want to make sure we all know it. Again, it's going to stay open for a little bit, so if you're just joining us, just get in and make sure you've answered it. So this question is not going to close, even though I've got the answer on the screen. You have to finish the exam by 6 p.m. Sunday, and that is Eastern Standard Time. Okay, so talking about what to do, because this week's a little bit different, being our last week of the semester. First of all sections, we have homework for Chapter 13. There's several homework problems. Don't let that alarm you. They're short, they're small, so it's not, I don't expect the homework to take a huge amount of time to do. There is an exam info quiz. It's 7 multiple choice questions. You've seen this before. It should be an easy 100% for you, and you get 2 attempts at it. So, but that's due Saturday. So homework and that exam 3 info quiz, that became available yesterday. Those are due Saturday. If you're in section 3, you also have a regular quiz. Now, there's a practice exam for exam 3. That's due sometime before you take the final. So that's not due this Saturday. You can certainly do it any time it's out there, but that's not part of what's due this week. Also need to note that up until this point with doing homework in this class, if you submitted it late, you'd still get credit. It would just be 10% off for each day late. That all comes to a screeching halt Saturday. Saturday, everything's due. So there's no more 10% penalty because we're coming down to the end where I have to start doing analysis and things like that. So all the homework is due Saturday. So whatever's due Saturday can't be done Sunday or Monday. So everything cuts off on Saturday for homework. Okay, so now talking about what to expect during finals week. So this is next week. The 10-point bonus, if you take the final exam, will be added to your final exam score Sunday night. So shortly after 6 p.m. on Sunday night, you will see that 10-point bonus be added to your score as long as you've submitted your exam before 6 p.m. Eastern Time. And I keep talking about the time zone just because we do have some people who are not in Eastern Time Zone taking the class. So I need to be clear on that. Okay, now your lowest 3 quiz scores, typically I drop those after Saturday, and this is the first semester I've ever offered a practice exam. So it occurred to me that I can't do that. I can't drop quiz scores until all the quizzes are in. Practice exams count as a quiz. All quizzes count the same. They're all weighted equally. So I will be dropping your 3 lowest quiz scores on Wednesday or late Tuesday night, somewhere in that time frame. So as soon as all the exams are in, the practice exam you technically have till you take your exam to do it. So at some point after that, probably plan on it Wednesday morning, I will drop your 3 lowest quiz scores. Once I do that, I'll send an announcement out. You can verify yourself. You go into my accounting lab results, and then you can scroll down through your list of scores, and you'll see your 3 lowest grade out. It'll say lowest grade or omitted or something like that. But you'll see those 3 lowest. I get a question every semester from someone, so I'll just say it now. There's no way that dropping your 3 lowest quiz scores will hurt your grade. It can only stay the same or help you. For example, if you have all 100% on all your quizzes, my dropping 3 quiz scores is not going to hurt your grade. You will still have 100%. So sometimes people are concerned that they'll drop, but you don't. So it's your 3 lowest scores, and those will be dropped, like I said, Wednesday, because I can't drop quiz grades on an individual basis. I have to do every one at once, so I have to wait for all those practice exams to be in. Okay, so the exam is over 6 p.m. Tuesday. Typically, I start then Tuesday night, and I will work Wednesday and Thursday. I will tell you, here's what I do. I look at every single person's grades. So that takes me a while, but I start right away. I know your grades are important to you. I know you want your grades. So when you finish your final exam, if you click on Results in My Accounting Lab, it'll give you an overall score. That is your grade. Your grade will not be lower than that. That will be your grade before your 3 lowest scores have been dropped. And you can take that percentage and look in the syllabus, and that will give you a reasonable approximation of your grade to date. Once I drop the 3 lowest quiz scores, that may or may not impact that depending on what percentages you have on those lowest quizzes. So once you see that grade, that is your grade in the class. Now, every semester, I have 600 students. Guaranteed there will be students on the bubble. Let's use the case of 89.9. So someone has a score in my accounting lab of 89.9. That is a B+. That's not an A-. So I know there will be people on the bubble, but I need to treat everybody exactly the same because it's not fair to people if I say about this person, oh, I'm going to bump them up because they're close. Well, what happens if I take the 89.9 and bump them up, and then now I've got 88.8 that only missed by 0.1. So it just never ends. So the cutoffs are firm. That said, I go through the grades, and I go through everyone's grades. I look at everyone's grades to make sure everything looks right. And when it's all said and done, I may in the background might be bumping everyone to 0.1 or something like that, so we have no one on the bubble. But I don't guarantee that, but it's not going to happen on an individual basis. It's not that I don't want to hear from you, but if you write to me and say, I'm only X% away from the next higher grade, can you bump me up? The answer is no. I will not adjust an individual student. I may adjust everyone, but it's going to be by the same amount, et cetera, et cetera. So I just want you to know that I will look at everyone's grade and I will treat everyone the same because it's not fair if I do it selectively for people here or there. So everyone's in the same boat, and I'll be looking at that. So in this perfect world, I would start looking at grades Tuesday night, continue on through Wednesday. It takes a while. And then when I finish grades, I will start putting them into Flashline. And I want to get them done as soon as possible because I'm not one of those people that's going to make you wait for your grade till Tuesday. I think that's agonizing to wait. So the grades will be in as soon as I physically can complete them. And they do go in Flashline. So there's that. And then here's my other speech. There is no extra credit in this class beyond the extra credit for taking the exam early. That's a great opportunity to increase your grade is to take the exam on Sunday. That's the extra credit. I don't offer retorts. And again, I treat everyone the same. So if you write to me, your situation may be you may need a certain grade to graduate, and I can feel bad for you, but I also, again, am treating everyone the same. And the best thing you can do about raising your grade at this point is we have this final exam coming. The best way to prepare for that, assuming that you have come to class every day and read the book and stayed current, is to practice the practice exam, to take the practice exam over and over until you can do it and do it well, and be able to do it in simulated exam situations. Even though when you take the practice exam, all the aids are there, you should be able, before you take the final, to be able to take that practice exam without those aids and to be able to do well on it. And then that should be an indication of what to expect on the final. But taking it one time for 20 minutes probably isn't going to prepare you adequately. And so use that practice exam. If you don't want to keep adjusting your score because the practice exam score is the average of all your attempts, know that you can get to the same content by going into study plan. So if you want to practice the material without impacting your grade or just concentrate on different areas, click on study plan. Study plan does not have a numerical impact on your grade. I mean, the more you do study plan, hopefully the more you know, so that would be a positive thing, but it's not required and it doesn't count towards your grade numerically. Okay, questions? Okay, so I think that's it on announcements about what to expect. I will get your grades done as soon as I can. Also, a reminder, several weeks ago I sent out an announcement had an Excel sheet for grade calculator, so you can put in your grades to date, and it'll give you an approximation, an estimation of what you need on the final to achieve certain grades in the class. Just a heads up that that's still there. If you click on announcements in Blackboard and scroll back through, it was around the beginning of November, mid-November, somewhere in there, that I sent that Excel sheet out. So if you're looking at what you need on the final to get a certain grade, certainly that's available. Any questions? Is anything I need to write out? Okay. Okay, and again, I will not adjust one person's grade. I have been known to adjust everyone's grade, but I'm not going to adjust one person because that's not fair to the other 10 people that didn't ask. So I am looking at everyone, and you will be treated fairly and the same. Are we still allowed to use the sheet of notes? Yes, it's the same rules as the prior exams, not changing the rules at all. You still can use the one piece of paper. The exam is over chapters 9 through 13. So, okay. Is there anything else I need? I'm not even going to read. Okay. Okay, so we're on our final chapter, chapter 13, financial statement analysis. So this is, now that we've looked at the balance sheet, now we've looked at the income statement, what can we do with them to analyze them, and what do people do with them? There are the first 3 learning objectives in the chapter all should be one learning objective in my opinion, because they are so interrelated. They're talking about converting in some way, shape, or form, converting the numbers, the dollar figures on the statements into percentages. It's easier to interpret a percentage many times than as a number. So we're going to start with horizontal analysis. Now, horizontal analysis is this percentage of changes year to year or period to period. So the thing to note here okay, is it goes year to year. Horizontal analysis is looking over the horizon. So we're comparing from 2011 to 2012 to 2013. And there's a two-step process. You compute the dollar amount of change from one period to the next, and then you divide that dollar figure by the base period amount. I'm going to do a sound check. Online, can you hear me? Because I'm hearing a lot of typing in my ear. Okay, I see a lot of yeses, so I'm going to go with it. It's just, I'm picking up someone's keyboard, and it's really weird. So do you want to scroll through and see if anyone has audio who's picking up? Because I'm hearing constant typing. Okay. Okay, so we're going to go through horizontal analysis, and again, you take this dollar amount of change, divide by the base period amount. Okay, so Shelby, you can hear it too. Okay. Yeah, this is one of those mysteries. I have no idea where the typing's coming from. I know it's not me. Yeah, okay. So now we're going to go through an illustration of horizontal analysis or this trend analysis. So we're using Amazon because Amazon's financial statements at the back of your book in one of the appendices. But Amazon's net sales, this is all in millions, increased by 27%. So what we're given here is the net sales for 2011 and the net sales for 2012. Okay, so that's what's given, and then it gives us the difference, and then this percentage. And what I'm going to do right now is show how we get these two numbers. Is what we're doing. So we're given the net sales, the two. So what we're going to do is compute the dollar amount of the change from 2011 to 2012. So this is that two-step process having to do with horizontal analysis. How do we do it? First thing we do is compute the dollar amount of the change. So to do that, we take the 2012 number, subtract the 2011. That's it. Just said, what's the dollar figure change from one year to the next? The second step then is to figure the percentage change to the period. To do that, we're going to take that difference, the amount of the difference, divide by the base period. Note that our base period is that earlier year, and that's where typically the errors will occur, is selecting so you want to pick this base year here. So notice it's the base year we're dividing by, not the newest year. That's the big key on horizontal analysis, is you're dividing by the earlier year. So you take the difference in the change, divide by the earlier year. Your earlier year is the base year. And I have to admit, for several years, I always had to look at it. By now, I've memorized it, but it's one of those things that doesn't feel intuitive necessarily. You're like, which one do I divide by? You divide by the earlier one. In your homework, you're going to have rounding. Watch for the rounding instructions. They'll be both usually in green, but they're also italicized. So watch for the italicized rounding instructions, or click on the Help Me Solve This, and you can see how many decimal places it wants, because there is going to be rounding this week. Okay, the next two slides are in your book. They're exhibits, and it's just doing the trend analysis for Amazon. This is their income statement. Remember that a consolidated statement of operation is the same thing as an income statement. So consolidated statement of operation is an income statement. And what we see here is Exhibit 13.2. We're taking the change from 2011 to 2012, converting it into a percentage. And we do the same thing 2010 to 2011. When you do a trend, when you do horizontal analysis, you're taking the earlier of the 2 years. So you're taking the difference and dividing by the earlier of the 2 years is the rule. So Exhibit 13.2 is one of them, and then 13.3 is the balance sheet. So we can do this horizontal analysis with both the balance sheet and the income statement. You can also do it with the statement of retained earnings. Now, another thing we can do with horizontal analysis, and it is horizontal analysis, but it's a little more specialized, is trend percentage. So this is still in horizontal analysis. Trend percentage is converting each year as a percent of the base. So to do this, we take any year's dollars, divide by the base year. So with trend analysis, we pick one base year. Regular, plain old horizontal analysis, we're comparing year to year and always dividing by the prior year. With trend percentage, we're saying let's pick our oldest year and then look at the trend over all these years. And we'll see an example coming up here. But the trend percent is the dollar, the year divided by the base year times 100. And we can see this with Amazon. If we look at Amazon's income from operations, so we have this top box here, which is just given from the financial statements. So it's telling us that in 2012 they had $676 of income. Of course, this is all in millions, but 2011, 862. 2010, 1406, etc. So they're giving us 5 years. The base year is the earliest year. So our base year in this case is 2008. And we see that we have 842 as our base. So what that means with trend analysis is we're going to divide each item by the 842. So what we'll do for each of these is we will take 842 and divide by 842 to get 100%. Your base year is always going to be 100%. If you divide anything by itself, it's 100%. But then for 2009, we're going to take 1,129, divide by the 842, and we get 134%. Once we divide by it, we get, and we have to multiply by 100 to display as percent. So you're getting a percent. You get 1.34, and then multiply by 100. Okay, so then in 2010, we're going to take the 1406, divide by 842 again, and then we will end up with 167%. So you're going to divide, with trend percentage, you're going to divide everything by that base year. So instead of going 1 year to 1 year and divide by the earlier year, you're using a base year. So this is, trend percentages are a subset of horizontal analysis. So this is one type of horizontal analysis. What we're going to do now is we're going to do one of the homework problems. We've got a couple homework problems we're doing today. So the first one we're going to do is 13-1. These go pretty quickly. 13-1 is horizontal analysis. And what we're given for this problem is we're given revenues and expenses. So this is the table we're given. We're given our revenues and total expenses for 2014, 2013, and 2012. And then it tells us to do a horizontal analysis of revenues and net income. Notice here that we're given revenues and expenses. So we have to do a little bit of calculation before we get there. And this is just, there's no magic to what they want you to do a trend analysis or a horizontal analysis of. They're just saying we want to do revenues and net income. but we're given revenues and expenses. Remember that fundamentally, revenues minus expenses give us net income. So what we need to do here is we need to, I'm just going to, if you have the book, you could write the totals down below the table, but if you don't, all I'm doing is taking revenues and expenses from the table, making a 2014 column, and coming up with net income. And then I'm going to do it for 2013 and 2012. So I've done all 3 years. I'm just taking revenues minus expenses to come up with net income. So I'm just setting myself up to be able to answer the problem because it asked me to do a horizontal analysis of revenues and net income. So we don't have to do anything with expenses, but we need expenses to calculate net income. So now that I have those numbers, I can start. Okay, so what I'm going to be doing is I'm going to be doing my increase in 2014, which is the increase above 2013. So for the very first number, for the amount of that 2014 increase, I'm going to take my revenues from 2014, subtract my revenues from 2013. That gives me a $244 increase in revenue. So that's 2013 to 2014. Okay, next item down, I have net income in 2014 minus net income in 2013, and that gives me 333. Now, notice I have brackets around it. It's because net income decreased from one year to the next. So I didn't have a loss, but I had a reduction in net income. So we want to put brackets around that to show what happened from 2013 to 2014. Net income went down by $333. For right now, I have the dollar figures. Now, when I'm doing a horizontal analysis, I take the dollar, the change, and divide by the base year, the earlier year. So what I'm going to do here for revenues is I'm going to take basically the 244 divide by the 20,045 from 2013. So I'm taking the difference between the 2 years, the 244, dividing by the 2013 revenues figure, and I get a 1.2% increase in revenues between the 2 years. Next up, I do the same thing for net income. I'm skipping expenses because the problem didn't ask me to do it. The problem asked me for revenues and net income, so I don't have to do anything with expenses. So I'm going to take the difference between the net income and for 2014 and 2013, divide by 2013. So the key on this is to remember to divide by the earlier year. And I get a 3.4% decrease in net income. Make sure decreases, you put parentheses around them to say that income has decreased. It will not be right if you don't have the decreases. So we've done 2014, that's all that's required. So then we do the same thing for 2013. So 2013, we're comparing 2013 to 2012. So that first number is going to be 1596. I'm taking 2013, subtracting 2012. So really, this one's going to be exactly the same calculations. You're taking the 1 year, subtracting the earlier year, and then same thing for net income, and then our percentages are going to be the difference divided by the earlier year. Again, so that's all you're doing on this homework is that pretty much completes the exercise. So it's a very, very quick exercise, and that's why there'll be several exercises in this homework, but they don't take very long. Okay, next up we have a question. So we're going to put up a true-false question. Horizontal analysis compares financial statement items in the current period with other items in the current period. True or false? What? Just a minute, let me find out. Okay. Not good. Okay. So, 10 seconds left on this one. Horizontal analysis compares financial statement items in the current period with other items in the current period. Good. Okay. And this is false. It's comparing, horizontal analysis is comparing our current period to a prior period. Horizontal analysis is about time comparison. How did this item react over time, or what happened to it over time? So horizontal analysis is comparing current periods to prior periods. It's not comparing within the same period. Okay, next up, going to do another homework problem, and this is another quick one. This one is a trend analysis. So this is a subset of horizontal analysis. So this trend analysis gives us sales and net income figures for 4 years, and it wants us to compute the trend percentages for sales and net income. And it tells us to use 2011 as the base year. So we know this is different because it's telling us our base is 2011. The prior horizontal analysis we did, we compared to the earlier, we would compare 1 year to the earlier year and use that earlier year as the base. This one's telling us we have one base. It's that earlier, the earliest year. It's telling us 2011 is the base year. So we're going to do trend percentages for sales and net income. And when we do this, we're basically, the formula that we use is to take sales of the current year, divide by sales of the base year, and to convert that into a percentage, we multiply by 100. Now the by 100, the times 100, I'm just putting that in there because it's implied. When we show these, we display them as percentages and we display them as a percentage sign. So you're not going to see times the 100 on anything else, but you'll see the answer displayed as a percentage, and that's how we're getting there. Okay, so starting this then using current year sales divided by base year sales. This is for the sales, and then you do the similar thing with net income. You take net income of the current year divided by net income of the base year. So what you'll do for the 2014 sales trend is you take the 2014 sales, divide by that base year sales of $8,410, and you get 118%. Again, I multiplied by 100 to get to the 118, but you'll see it in your calculator as 1.18, so just a percentage. So that's the sales trend. And with a trend analysis, we've got one base year. It doesn't change. So that's for sales. Next, moving down, we do the same thing with net income. Net income, we use the 2011 net income as the base. So we're going to take the 670 net income, divide by the 432 net income for 2011 for our base year, and we'll get 155%. We're going to do that same thing now for 2013. 2013, we're taking the 2013 sales revenue divided by 2011. Notice that we're always dividing by that base year when we're doing a trend analysis. So we have the base year 2011, that doesn't change, just the current year changes. So we do that, and then we can do it for net income, and again, we're taking our net income from this year, dividing by the net income from 2011. And then 2012 is going to work the same way. You're going to take the 2012 numbers and divide by 2011. So when we're doing trend analysis, you're using everything, we're dividing everything by its base year. And the base year in this case is 2011. So that oldest year is the same with the trend analysis. Whereas horizontal analysis, just a plain vanilla horizontal analysis, you're going to take 1 year to the next year and divide by the earlier year. This one you have one base. Okay, so then we can do the same thing with 2012. So again, we're taking 2012 divided by 2011, both for sales and net income. So we're doing exactly the same thing. And then I don't show the computations here, but the base year of anything, always 100%. To divide something by itself is 100%. So in 2011, we would see 100% for sales and 100% for net income. So horizontal analysis or trend analysis is used to look at things over time and see how they've changed. So you're looking at the same company over time to see how those items have changed. So horizontal, you're looking at the horizon, you're looking at this change over time. Okay. We have another question coming out now. Oh, and I have the answer. So there, please answer it. Okay, I clicked twice. Okay, so answer this question. It is in Learning Catalytics. Once we start it, there's not a way to get rid of it. So horizontal analysis is performed on, and actually horizontal analysis we can do it on the income statement, we can do it on the balance sheet, and we can do it on the statement of retained earnings. It didn't save my answer. Yeah, the question, I just clicked too fast for the PowerPoint. So the answer's here. If you don't get 100% on this question, there should be no reason anyone gets this question wrong, right? Okay. Answer the Learning Catalytics question. The answer is D. Okay, the reason it sometimes sounds like I'm on helium is because your Wi-Fi connection is cutting out. And instead of losing big chunks of words, Blackboard in the background speeds everything up, and it'll deliver the sound, but it's a lot faster, and that's why it makes that sound. So it is a Wi-Fi connection issue. Question 2 was open for a little while. Message. Okay, so we're going to close this in 5 seconds. Right now, only 85% of you have this question right. This is no trick. The answer is D. We're down to 84% correct. Okay, I'm going to follow up with some emails on this one because I want to know why. Okay, so did we do our 10-second warning? Okay, so let's close it. Okay. Next up, so we've done horizontal analysis. Now we do the vertical analysis. Vertical analysis like it applies, is now going up and down. So instead of doing the horizon over time, vertical analysis says within the same time period, let's compare all the items within that time period. So vertical analysis says let's look at this financial statement item on this financial statement to its base. And there are two bases. This is absolutely something I would write down. I would know this. The base for the income statement, the base is total revenue. Now, total revenue is also total sales revenue. And for the balance sheet, the base is total assets. Those will never change. If you're doing an income statement, your base is going to be total sales revenue. If you're doing a balance sheet, the base is total assets. It does not change, period. So an example of vertical analysis, if we're doing income statement, is taking every income statement item, dividing by net sales or net sales revenue. Remember, net sales can be net sales, net revenue. They're the same thing. It can be net sales revenue, but it's the same thing. So an income statement, automatically your base is sales revenue. On a balance sheet, your base is always going to be total assets. That's how you do it. So it's always going to be those two items, just depending on which statement you're doing. Okay, next up I have two exhibits I just want to call your attention to in your book. The first one is Exhibit 13.4. 13.4 is a statement of operations for Amazon. And the statement of operation, I've written it here in red. The statement of operation is also known as an income statement. And an income statement, you divide every number by net sales or net sales revenue. So in 2012, for example, at Amazon, if we're just looking at this, everything in 2012 would be divided by 61,093. So every single item, and that's where you get the percentage. So column C, where it says percent of total, that's as a percent of sales. So you can see that Amazon's cost of sales is 75.25% in 2012. And what makes that really useful information is you can compare Amazon's cost of sales to, say, Walmart's cost of sales and see who has a higher cost of sales. You can start looking at margins for companies. The vertical analysis is a wonderful tool to be able to compare companies to other companies, to compare companies of different sizes. Because normally you couldn't compare dollar figures because Walmart's dollar figure is going to be a lot bigger than a little mom and pop store just because they're huge. But when you convert it to a percentage, you're able to compare stores and companies of different sizes. The next exhibit I just wanted to call your attention to is 13.5. It's the balance sheet and vertical analysis. Every single number in 2012 is going to be divided by the total assets. And it's not, I didn't do the whole screenshot, so total assets isn't showing. But for balance sheet, we divide every single number by total assets. So you can see Amazon's cash, for example, is 24.8% of its total assets. And that's interesting when you start comparing it to its competitors and seeing where they've chosen to put their investment in. Okay, so another question. When performing vertical analysis of an income statement, net income is usually used as the base. Okay, when performing vertical analysis of an income statement, net income is usually used as the base. True or false? Okay, 10 more seconds on this one. When performing vertical analysis of an income statement, net income is usually used as the base. True or false? This one's false. The reason it's false is the base for vertical analysis income statement is always going to be sales revenue. Okay? Again, we can refer to it as sales, we can refer to it as revenue, but it's always going to be the base when we talk about an income statement. When you're talking about a balance sheet, always going to be total assets as the base. Another question. Okay, the relationship of each individual asset as a percent of total assets is an example of vertical analysis. True or false? Ten more seconds on this one. The relationship of each individual asset as a percent of total assets is an example of vertical analysis. True or false? And that is true. So vertical analysis for balance sheet, you're going to divide by total assets. I have one more question here until we have more PowerPoints. So this one you have to do a little bit of thinking on this one. The company's net income as a percent of sales is 15%. Using vertical analysis, the cost of goods sold as a percent of sales must be 85%. I think on this one, I'm going to give you the answer, and then we're going to talk about why. And don't close it yet. Don't close it yet. Okay. Okay, so first thing, to answer this question, here's what I would do. And I would definitely on my reference sheet have this little table that I've written over here. So when I'm talking about cost of sales and net income and everything, what would be helpful is a listing of how I get to net income. So this is back reviewing back to chapter 3 or so, 2 or 3. So to get net income, I take sales minus cost of goods sold equals my gross margin or gross profit less operating expenses equals net income. So I would know that. I would have that in the corners because there's so many basic questions I can ask with that basic format. So we know we have sales minus cost of goods sold gives us gross margin, then subtract operating expenses gives us net income. So now what we can do is we can dissect the question. So the question says net income, the question tells us net income is 15%. Okay? So what it's asking is, does this number right here have to be 85%? Okay? That's what the question's asking. Where did I get the 100%? In vertical analysis, the base is always going to be 100%. In an income statement, I divide everything by sales. So if I divide sales by itself, it has to be 100%. So an income statement is always going to start with 100%. Always, always, always. So we have 100% for sales, and then we have net income of 15%. So the question is saying, does cost of goods sold must it be 85%? And the answer is false, because the only way it can be 85% is if you have zero operating expenses, which isn't going to happen. We know in this case that cost of goods sold generally has to be less than 85%. But this is an example of knowing the basic structure of an income statement. If sales minus cost of goods sold equals gross margin less operating expenses gives you net income. Knowing that. And if you don't know that, have that written on your sheet somewhere because it'll come in handy. Just like accounting equation. You know the accounting equation. If you don't, you should be writing it on your sheet. It's assets equal liabilities plus equity, and knowing what's in equity. Those kind of things are fundamentals. Even though like our final isn't comprehensive, we're building on things we learned earlier. So this is just an example of something you might need to refer back to. So this question is going to close in 10 seconds. So, okay. Okay, so you should have the right answer in there. And right now, this is sad, 78% have the right answer. Okay, so it's the answer is false, and we're closing it in 5 seconds now, Haley. Okay. Good. Okay. Okay, and then our last learning objective for today is common size financial statements. And common size financial statements are a subset of vertical analysis. So it's still the same. So we've done three learning objectives that are all clustered around the same concept. Common size financial statements report only percentages, and this is where we're going to be able to compare companies of different sizes. Common size analysis is vertical analysis, but common size statements only are presented in percentages. You don't see any dollar figures in common size financial statements. The reason we use common size financial statements is to compare companies of different sizes. So we express a company's income statement as only percentages, percentage sales. And then we can express a company's balance sheet only as percent of total assets. And the reason we do it is we compare companies of different sizes. That's a big reason for doing common size statements. We use it to do something called benchmarking. Benchmarking is comparing a company to some standard. Sometimes we pick a competitor that we most want to be like. Sometimes there's an industry standard that we're comparing next to. But when we do benchmarking, we use percentages. So just as a quickie example, we can compare Amazon to Walmart. And we see Amazon in the common size financial statement, there's no dollar figures here. But bottom line, Amazon's operating income in 2012 was 1.1% of its net sales. So that means every dollar that Amazon collected, it made 1.1 cents. Okay? So Walmart, every dollar that Walmart collected, Walmart made 6 cents. So just comparing bottom line to the two companies there, you can see that right now, Walmart is much more profitable. This isn't to say this is the only measure of comparing Amazon to Walmart, but this is one thing you can look at and you can see, boy, operating income-wise, Walmart is more profitable. It would be very difficult to do the same analysis using dollar figures because Amazon and Walmart have very different dollar figures, different amount of assets, etc. But this allows us to use companies of different sizes. You can see the cost of sales at Amazon and the cost of sales at Walmart, 75.2%, 75.1%. They're very close. Where they deviate is operating expenses at Walmart are much higher than, operating expenses at Amazon are much higher than at Walmart. And then to answer the question about why is that, you would go into an expanded financial statement in the common size and you would compare actual line items and see where Amazon is spending so much more on operating expenses than Walmart. So that's just an example of what you would use common size for benchmarking. That's a great use for common size statements. Okay, we have another question coming up. Common size analysis is also known as what? How are we doing on this? Okay, 10 more seconds on this one. Common size analysis is also known as what? And that would be vertical analysis. So common size financial statements is known as a kind of vertical analysis. Okay, that concludes the material for today.